Kristen King from the Investing Channel, and welcome to The Juice. Just take a look at this chart. If that's not enough to scare off at least some prospective homebuyers, we don't know what is. Between record prices and interest rates firmly situated above 5%, it costs a lot to carry a mortgage. Let's piece that together with some other data. Pending home sales dropped 6% in the 4 weeks leading up to May 8th. That's the biggest annual decrease since June 2020. Plus, there's a bidding war happening on rentals. For example, in Los Angeles, renters going 10% over asking is common. In some cases, rentals are going for 1.5 times the advertised rent. In Austin, amid low inventory, rentals went for 35% above asking on average in Q1. In most major markets, it takes longer to break even on a home purchase than it did pre-pandemic. And as with inflation, you might only agonize over the decision to buy a home if the increased costs represent a meaningful hit to your pocketbook. It's not that people earning high incomes and presumably sitting on meaningful amounts of cash don't care about paying more. It's that they're apparently rushing to buy in today's environment in anticipation of even higher home prices and mortgage rates. Proof of this, even as demand falls, the average home only stays on the market for 15 days, an all-time record. But not everybody has the personal financial luxury of going this route. They must ask other questions like, would you rather be house rich or cash poor? Setting all of this record-setting data aside, prospective homebuyers of modest means almost always have to ask themselves if they can handle the upfront and ongoing costs of homeownership, irrespective of if and when their investment will become profitable. Can you afford to put 10% or 20% down on a home? Depending on where you want to buy, that number can reach 6 figures. Do you even have that kind of cash saved? If not, you might be priced out of the market before you even started. At the same time, can you cover not only elevated monthly payments, but property tax? For example, property tax will run you about $1,000 a month on a home around the median in downtown Austin, closing costs and planned as well as unplanned maintenance. Will you feel cash secure if you find yourself in an all too typical house-rich, cash-poor situation? The bottom line is this. History shows that real estate has been one of the best investments you can make. However, for many people, a home represents a place to live forever. If this is you and you don't exactly have a ton of money saved and coming in, the question of home ownership comes down to cash security. Will the cost of home ownership, particularly in today's environment, turn the screws on your monthly budget, resulting in cutbacks on needs and wants not associated with your property purchase? On-paper profits, i.e. house rich, don't mean much if you don't intend to sell. And even if you do, you still need a place to live. All of these factors matter as you decide whether to rent or jump into this insane housing market. That's all we have time for today on The Juice. Click follow and subscribe to The Juice email for your daily dose of market minerals.